Welcome student to the second part of fourth module. In this video I am going to explain you about differences between vouching and verification, differences between verification and valuation, and other aspects related to valuation of assets. The differences between vouching and verification are as follows. Under vouching examines the entries which are related to the transactions recorded in books of accounts, but verification examines the assets and liabilities appearing in the balance sheet. In vouching it is based on proof or a documentary evidence, and verification is based on physical inspection of the asset and liabilities, as well as it is also a documentary examination. Thirdly, vouching is done for the transaction of a whole year, but verification is done at the end of the year when the balance sheet of the company is prepared. Finally, vouching indicates a particular asset must possessed by the company or the concern of that particular firm, and verification indicates the existence of the asset and liability at a balance sheet date. Secondly, the differences between verification and valuation. Verification is treated as the final work in the auditing process, while valuation is considered as a part of verification. Verification is the work of an auditor, but not the valuation. Valuation is the work of a concerned authority or a board of people who are there to value the balance sheet items. Thirdly, the auditor has to check the items shown in the balance sheet while he was doing a verification process. In valuators will going to check the amount shown in the books of accounts. Verification is made at the end of the year, but valuation can be made throughout the year. Finally, verification is based on individual or physical check of item, but valuation is based on a documentary evidence. Heading is modes of valuation of different types of asset. Verification and valuation of assets are almost interdependent and interrelated activities. Verification of assets is an important segment of auditing, and valuation of assets is its integral part. For this purpose, assets are classified into the following 5 categories, that is fixed assets, intangible assets, fictitious assets, wasting assets, and current assets. So I won't think much explanation need to this particular items, but I will give you a one-line meaning and also I will move to the next topic. Fixed assets. These assets are held for permanent use and to earn income, but not for a resale, like land and buildings and plant and machineries. Secondly, intangible assets. These assets cannot be seen or touched, but have the ability to generate income. They include goodwill, patent and patents, copyrights, trademarks, etc. Fictitious assets. These assets are nominal in nature, resulting in the form of huge expenditures like preliminary expenses, cost and discounts on issue of shares and debentures, underwriting commissions, etc. Wasting assets. These assets are gradually exhausted as they are put into use, and these includes mines, oil wells, and rock quarries. Okay. Current assets. These are the floating assets acquired or created for resale or converting them into cash, and it includes stock, book debts, and bill receivable, etc. Next thing is principles for valuation. The valuation concept issued by the International Association of Financial Engineers in 2003. The following principles for valuations are three principles. The first one is transparency. The basis and methods of valuation must be transparent and to be known to all concerned parties. Secondly, consistency. The same technique or methods should be used every time, and the valuation should be reproducible by a third party. And finally, independence. For banks and other large financial institutions, the back office should own the valuations. For smaller financial institutions, verifiability of the valuations can provide functional independence.